Okay, in this video, I'm covering absorption costing can result in overproduction. When I first learned about this, I was like, how is that even possibly the case? But as we go through it, I think it's going to make total sense. Okay. So this concept, right, where we're using absorption costing and somehow that methodology is going to lead us to produce more as a business, like more units than we actually need that we're going to sell. So first, let's think about the difference between absorption costing and um, actually, I guess we're going to do absorption costing in both situations, which makes sense. So in the first situation, we're going to produce 60,000 units, okay? And if my overhead is $600,000 and I'm producing 60,000 units, then the per unit cost is going to be $10 per unit. Now, alternatively, if I choose to produce 100,000 units, I'm still going to incur the same 600,000 in fixed costs. However, I'm now producing 100,000 units, and therefore each unit has a fixed per unit cost of $6. You ever hear that concept? Um, High volumes, low margins. This is what we're talking about, right? We're saying, listen, the more units that we produce, we're spreading the same amount of fixed costs over more units, and therefore it becomes less expensive for us to produce on a per unit basis. And therefore, if I sell or produce a lot, I can be more competitive in the market by spreading my fixed costs over a larger number of units. It's kind of the reason why, those small ma and pa shops are more expensive. Like if you go into a store and you buy a computer from a ma and pa shop, maybe you're paying a little bit more there than you would off of Amazon. And it's because the ma and pa shops, they have lower volumes. And if they have lower volumes, they're spreading their fixed costs over fewer units. Okay, so back to our example, the per unit cost, if I produce 60,000 units, is $25. And the per unit cost, if I'm producing 100,000 units, is $21. Okay, now let's go back and let's look at an instance where we are only selling 60,000 units, right? So again, we're producing 60,000 and selling 60,000 in one example. And in that example, remember our per unit cost is $25, at least for product costs. And therefore, if I were to sell 60,000 units and I'm going to sell them for $40 a unit, yada, 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 I'm going to earn income of 580,000. Now, let's think about the situation where we produced 100,000 units, but yet we're still only selling 60,000, right? The volume of sales is independent of how many units we make. So again, same sales. However, look, our cost of goods sold goes down, right? Because the per unit cost of goods sold is 21,000, and it specifically, the per unit cost of goods sold is $21, and it has to do with the fact that we spread our $600,000 in fixed costs over 100,000 units as opposed to 60,000 units in the previous example. We produce more, and on a per unit basis, it becomes less to produce. And remember, we're only going to recognize as an expense the units that we sell, right? So again, if we have material, work in process, finished goods, right? In this second example, we produced 100,000 units. And at the end of the day, we still have 40,000 units in finished goods. And then we sold 60,000 units in this example, right? So some of our fixed costs associated with the 40,000 units that are still in finished goods haven't been treated as an expense. And therefore, if I was a manager and I was getting a bonus, if I received a bonus, if I achieved some level of income, right? So if I get a bonus, if my income is over 600,000, one way for me to manipulate my bonus and the income is I could say, hey, you know what? If I produce only what we need, I fall short of my goal and I'm not going to get a bonus. However, if I overproduce and I make the per unit cost less expensive, then I can generate more profit. And think about it in terms of a public company. Man, if we're a public company and we want to manipulate our financial statements because the more profit we report, theoretically, all things equal, the more valuable our stock price is. So, absorption costing could lead to overproduction in some situations. If you have variable costing, it's not going to change. Remember, we were saying under variable costing, we're going to treat all the fixed costs as period costs. And therefore, the fixed manufacturing overhead, whether we're producing 60,000 units or 100,000 units, those are going to get incurred in total no matter what.